Hey gang, welcome to Money Talks. I'm your host, Bill Barhydt, founder and CEO of Abra. We have a huge show this week. We're going to have Kwon from the Terra Luna project on. He's going to talk to us about what's going on with Luna, Terra Luna. We're going to dig into Anchor. It's going to be super cool. So we'll get into that in a few minutes. Of course, he's been in the news lately, giving their Bitcoin buying spree. They've publicly said that they're looking to purchase up to $10 billion worth of Bitcoin. Wow. So we'll get into that. I'm going to give you my take on what's going on in the crypto markets. Of course, we'll do our standard AMA. Now, before we get to bring on Natalie, and maybe Natalie wants to comment on this, I've got some huge news for you. So let me bring it up here. So I've got to find it first. So the huge news is basically that if I could just find it, there we go. So apparently, the Litecoin is rebranding to Bitcoin Lite. So I don't know if you've all heard about this, but after several, what does it say here? After several hard-fought, intense back and forth discussions within the Litecoin community, it was decided that Litecoin will undergo a rejuvenating marketing campaign. Litecoin will be rebranding itself to Bitcoin Lite. Why, you ask? After thorough research and witnessing the amount of newcomers that were getting confused buying Bitcoin Cash, Bitcoin SV, Bitcoin Gold, and Bitcoin who knows what else, thinking they were the real Bitcoin, we saw an opportunity to gain new followers that we'd previously been missing. And I also heard a rumor that Roger Ver will be joining the company's board of directors. Obviously, April Fools. So anyway, all right. So I can tell by all the virtual laughter that went over really well. Okay, so we got a lot to talk about, and why don't we start off with the illustrious Natalie Brunell. Good morning, Natalie. How are you?
Hey, good morning, Bill. I was laughing, so I love the April Fool's jokes out there. Yeah, so much to talk about with Bitcoin. Yeah, first up, obviously Bitcoin's price has been in a bit of a pullback move. This is what I call accumulation mode, although I did buy in like the high 40s, so I'm kind of upset. So we did move from the high 40s to below 45,000, and we've really seen some bearish and bullish headlines this week. All of them may have impacted the price. So let's get to the stories. First, I do want to mention that U.S. Senator Ted Cruz, who is a Bitcoin holder and advocate, he has proposed a bill to prohibit issuing a central bank digital currency, a CBDC, because he feels that it could be used as a surveillance tool by the federal government, similar to what we've been seeing in China. So he wants the U.S. to encourage and nurture innovation in crypto and Bitcoin. And I guess the kind of CBDC Cruz and other lawmakers who support this new bill agree on is one that's open, permissionless, and private, offering access to the digital dollar with a transparent blockchain and maintaining the privacy elements of cash. So he seems to be describing Bitcoin, right? But really, there are some big concerns of Bitcoiners that without the proper education, the public and policymakers will be behind a CBDC that would essentially create a system of social credit that could have, centralized incentive structures that create dollars that expire or can be seized, like we saw in Canada. And of course, that every transaction would be under the nose of the government. So I know this isn't technically a Bitcoin headline, but it's very new. And I think it's very important for our industry to monitor. So moving overseas, we did see a Bitcoin price dip yesterday when European lawmakers were voting in favor of outlawing certain crypto payments without identification of the payer or recipient. Now, Bitcoiners are obviously worried that this is a huge invasion of privacy, but EU officials said that the proposal was intended to extend anti-money laundering requirements that apply to conventional payments of 1,000 euro to the crypto industry. So under the new rules, exchanges would have to report to authorities anytime a customer received over 1,000 euro of crypto from a self-hosted wallet. And the rule would require the exchanges facilitating those transfers to verify that identifying information to the government. So members of the European People's Party, which is a center-right group, opposes these changes and said this was, quote, a de facto ban of self-hosted wallets. And they added that this approach of regulating new technologies will essentially allow the EU to fall behind other jurisdictions that have more open minds. So this isn't a done deal yet. I think it did affect the price a little bit, but this law would have to be agreed upon by both the Parliament and national ministers who meet as an EU council. So I'm certainly hopeful this will be reversed. Another big headline this week, climate group Greenpeace, along with Chris Larsen, one of the billionaire co-founders of Ripple, they are campaigning to change Bitcoin's code. A lot of Bitcoiners very angry about this. The Greenpeace and Chris Larsen, they say it needs to become a more environmentally friendly consensus model. And Larsen said that Bitcoin is heading down a, quote, unsustainable path of energy consumption. They pointed to Ethereum being in the final stages of a very complicated process to shift from proof of work to a new proof of stake mechanism. And now they're trying to put pressure on the Bitcoin community to change its verification method under this Change the Code, Not the Climate campaign. And they say that this would reduce Bitcoin energy usage by 99.9%. So Bitcoin proponents are very, very upset about this. They say moving to proof of stake could undermine what has given Bitcoin so much of its strength and growth and resiliency, and that consensus mechanisms other than proof of work reintroduce the centralized concept of trust and are much more prone to corruption. Bitcoiners also point to examples of how the technology network can actually help the development of renewable energy and the renewable energy economy here in the US. And in fact, I'm sure you've talked about this with your viewers, Bill, the real data shows more than half of Bitcoin mining energy is derived from renewable sources. So obviously that story sparked a lot of debate on Twitter. And I just have to point to the sentiment in a tweet from one of my favorite Bitcoiners, podcaster Preston Pish. He said, Chris, I strongly encourage you to fork it. Nothing's stopping you. I'm sure you'll find hundreds of people that will follow your lead. So what are you waiting for? Moving on to another big story. I know we're going to have more on the show on this. Terra Luna on its way to accumulating $10 billion in Bitcoin. The Luna Foundation Guard, which is the company behind Terra, has raised about $2.2 billion for its Bitcoin reserves, hoping it'll hit $3 billion soon, with the long-term goal of $10 billion in Bitcoin to back up Terra, which, by the way, if you're not familiar, is the largest algorithmic stablecoin on the blockchain. The company's current holdings exceed 21,000 Bitcoin. And in an interview, founder and CEO Kwon said he wants to hold almost as much Bitcoin as Satoshi. He wants to be the biggest Bitcoin holder aside from Satoshi, and said that the company is working on bringing a form of tokenized Bitcoin to the Terra blockchain in the most, quote, decentralized way possible. And he tweeted that although the company doesn't have 10 billion right now, he expects UST money supply to grow, and a portion of seigniorage will be used to build BTC reserves and bridge that to the Terra chain, but that infrastructure is not ready yet. So, you know, for those who are bullish about this news, they believe that if successful, UST could become a dollar stablecoin backed by a fully transparent asset, as opposed to collateralized stablecoins like USDT and USDC that are backed by dollars in reserves, but those have to be verified essentially by accounting firms. So a dollar stablecoin with provable reserves in the form of BTC, you know, is seen by some analysts as an improvement. There are also many Bitcoiners who are skeptical and wary about this move by Terra. They don't trust it. They're wondering if the company's mission is really to build this Terra ecosystem or just to stack as much Bitcoin as possible using easy money. And finally, the last story, let's end on a good note here, an exciting note. MicroStrategy, which is a subsidiary of Michael Saylor's company, MicroStrategy, closed a $205 million Bitcoin collateralized loan with Silvergate Bank to purchase Bitcoin, of course. According to the press release earlier this week, Silvergate Bank issued a $205 million term loan under its Silvergate Exchange Network, SEN, leverage program to MicroStrategy. For background, SEN, it's only been around since 2020, and it's already grown to more than $570 million in commitments, which kind of shows the increased demand for access to capital and digital assets. And this will be an interest-only term loan secured by certain Bitcoin held by MicroStrategy's collateral account, with a custodian that they'll mutually agree on. And under the terms of the agreement, MicroStrategy will use the loan proceeds to, number one, of course, purchase Bitcoin, but also to pay fees, interest, and expenses related to the transaction, and for MicroStrategy or MicroStrategy's general corporate purposes. And Michael Saylor had this to say about the announcement: the SEN leverage loan gives us an opportunity to further our position as the leading public company investor in Bitcoin. Using the capital from the loan, we've effectively turned our Bitcoin into productive capital collateral, which allows us to further execute our business strategy. He should have waited a couple days because, they could buy Bitcoin for a little bit less than earlier this week, but very bullish news, lots of news in general this week. So I'll turn it back to you, Bill.
All right. So Natalie, I got to vent for a minute. So thinking about Europe, where clearly lawmakers know absolutely nothing about pretty much everything, and thinking about Greenpeace, which I'm sure they have a gazillion software technologists on staff digging into the code of Bitcoin and trying to understand how proof of work works. And I'm sure they've gone out and interviewed all of the miners that have significant amounts of hash power in order to come to the conclusions they've come to. Why is it that these people who actually don't know anything about how this stuff works think that they should have any kind of influence over how the rest of us use it? I just don't get it. Like, why does this keep happening?
Yeah, I've always said that governments, they want to maintain that grasp on their power and their monopoly over money. And so unfortunately, this is why I think it's so important that those educational efforts are made with policymakers, because they are basically clinging on to what they have left of power over money. And obviously, they don't understand the technology behind it. If you make the argument that Bitcoin's going to destroy the environment, you don't understand proof of work. You also don't understand the value of using energy to secure proof of work. So, it just shows that I think a lot of work needs to be done. I don't necessarily think that all politicians that are in there making these decisions or votes have terrible intentions. I think that they're just misinformed. And that's unfortunate, right? I don't think that this EU ban will move forward. I'm more, optimistic about what will ultimately happen. But when you see some of these developments and these initial votes, it is discouraging, right? And the European Central Bank doesn't want to let go of its prerogative over money. So I think that we'll move in the direction eventually, but we're certainly going to see more hurdles along the way.
Yeah, it's on the one hand, it's incredibly frustrating, but on the other hand, I think you're right. I think persistence, tenacity, and that educational process are unfortunately exactly what it's going to take. But I've said for years, and Bitcoin is really what made this hit home for me is that, we don't have an Hippocratic oath in politics, right? And the idea that you can actually, you don't have to think about doing no harm when you're trying to exert your control, to me makes no sense. But anyway, vent/off. Anyway, thank you. Super interesting as always. And I guess we're gonna see you. We're gonna do this in person in Miami next week. So I'm really excited for that. And hopefully we'll have a lot of exciting news to reflect on from the week, given that it'll be 2.5 days into the Bitcoin conference. So that's going to be awesome.
Yeah, I really look forward to it. I'll see everybody in Miami who's going, and looking forward to obviously having this live in Miami at the conference.
And you're going to be emceeing one of the days? Is that right?
Actually, right after our episode, I'm going to be emceeing on the main stage, Satoshi Nakamoto stage. So hopefully we'll see you there.
Yeah, I'm doing a panel with Jack Mallers. So I guess we're going to get into it on Lightning, since we have a slightly different perspective on this, even though we think it's going to end in the same place, but it should be interesting.
Oh, well, he was my last guest on Coin Stories. So
there you go. I saw it. It was very interesting.
Yeah. Thanks so much, Bill.
Yeah. Okay. Thank you. Take care. Have a good weekend. All right. Thanks, Natalie. So by the way, I got to show you this. I haven't looked at this in a while. I was able to find it while Natalie was talking and I was listening. This is, let me turn this off again and bring it back up so that I can share it with the share sound. Optimized for video. There we go. All right. So this is a video that I shared from with. Anyway, it's not going to work. Okay, it's not cooperating. So I was going to show you the Ted Cruz video, but maybe we'll copy the link and share it in the live chat. There's a video where Ted Cruz basically rails. And by the way, I was never really a big fan. And the idea that he's become the voice of reason within the political sphere of the Bitcoin community is mind-blowing to me. But he basically rails on his fellow politicians for trying to regulate something they don't understand, which obviously has never stopped them before. But this is just too important. And so go watch that again if you haven't seen it. I should probably set a note to myself to watch it once a month to get me jazzed up on what's going on. All right, so excuse me. So yeah, so coming up next, we've got our super cool interview with Kwon from Terra Luna. Then we're going to get into a little bit of a market analysis and, of course, the AMA. Before we get there, one of the most important parts of making Abra super easy to use is, of course, making it really easy to add funds so that you can buy crypto seamlessly, of course, or transfer crypto into Abra for earn or to trade. So we've built several ways for you to add money and crypto into your Abra account. Take a look.
Funding your Abra account is easy. Just open the app, then tap Add Money. To buy with your Visa or MasterCard, tap the app. Click Bitcoin through Simplex. Open in your web browser. Enter the amount, then paste your Abra wallet address and tap Continue. To transfer money from your bank account, tap on ACH Transfer, add a new bank account, Continue. Then select your bank. Enter your username and password. Confirm your identity with a code. Select account, enter an amount, and confirm. For a wire transfer, tap Bank Wire Transfer. Then tap Wire Instructions. Log on to your bank's online banking page, then initiate a wire transfer. Follow the instructions on the Abra app to input your account, then send your wire. Transferring crypto is simple. Tap Deposit Cryptocurrency, then select the coin you're transferring. The Abra app gives you the receive address to send your funds to. Funding is easy with Abra.
Okay, welcome back. So here's a little bit about our next guest, Kwon. Do is the founder of Terra Luna. He's a Stanford grad, worked for Microsoft and Apple before founding AnyFi, a peer-to-peer Wi-Fi company. He founded Terraform Labs initially to develop a more efficient payment system and launched the Terra USD stablecoin and Luna, the company's governance token. And of course, he's been in the news lately, given their plans to buy $10 billion worth of Bitcoin. Now, this is personally super interesting to me for a couple of reasons. One, we started Abra initially thinking that as we deployed this kind of global crypto banking system, we would initially focus on peer-to-peer payments. Sounds familiar. Then, in order to facilitate person-to-person payments, we actually developed effectively a stablecoin based on Bitcoin reserves. Also sounds familiar. So Terra is kind of like taking what we were thinking about doing at Abra and doing it now in this kind of second generation of basically algorithmic-backed stablecoins. And I'm really fascinated by the approach they've landed on. I think they're really onto something. We're going to get into how this all works, how Anchor works. He's joining us from Singapore, and let's get into it. Here we go. All right. So welcome, Kwon, to Money Talks. Thrilled to have you.
Thanks for having me.
Yeah. So you're based in Singapore, right?
Yes.
Right on. So tell us, first of all, obviously you've been all over the news. Congratulations, I suppose. And obviously, congratulations on the uptake here with Terra Luna. I'm, seeing the numbers, and we'll get into that in a bit. And it's really interesting how this works and what's going on. And a lot of questions on the live chat as well as on Twitter before the show. Just oodles of questions, which we'll get to. And so, my first question for you is how did you get here? You're I think you're in your 20s. Obviously this thing kind of sprung to stardom over the last few years. What was your kind of entrance into crypto and why Terra?
Yeah, so I'm actually 30. So
okay.
In crypto land, I'm a village elder.
Well, I don't know what that makes me, but okay.
Yeah, so after graduating from college, I was working for a big tech company, and then I spun out to work on a Wi-Fi mesh startup. So the technology that I was working on allowed user phones like cell phones and laptops to connect to each other via Wi-Fi Direct. Mm-hmm. So the idea was that you could gain access to the internet even if you didn't have LTE connection by hopping through a network of users around you. So how I got into crypto is you can imagine as you're entering a standard search query for a distributed network or Wi-Fi network, that would turn up a lot of things about Bitcoin and Ethereum. So I started to do a lot of research into, the various different protocols into crypto, started to go to community meetups. And one of the things that really jumped out for me is that for an industry that brands itself the cryptocurrency industry, there were, remarkably very few people that was actually working on creating a better currency. So most people were either working on, creating like a specific app, like maybe a betting market, like in the form of Gnosis, and a few other things, or trying to make Ethereum faster. But there was nobody trying to make, like a decentralized dollar, if that makes sense. And and the rest is history. That's how Terra got started.
Yeah, that's fantastic. So when you say create a better currency, what was, or what's wrong with either the first generation of stable coins or Bitcoin as money or as a currency for payments? I mean, what is it about how you define a better currency, is missing that got you to want to do this?
Yeah. So for the vast majority of people, they tend to denominate their medium of exchange and store of value in the form of the currency that they pay taxes and get paid in. And that happens to be the local fiat currency of a jurisdiction, unless they happen to live in Venezuela, for instance. So for example, in Korea, the store of value is the Korean won. In the US, it's the dollar. In Europe, it's the euro. So it makes sense that if there was a digital currency that could remain stable value against those local fiat currencies, then in that case it would be the best use case for cryptocurrencies in the world. Now the issue for Bitcoin is that I think it's a great investment vehicle, and I think it's going to increase in value over the long term. The issue is it's very difficult to use it as a medium of exchange or to strike employment contracts or to create financial products with. So for example, if you're an employer and then you're trying to sign like an employment agreement denominated in Bitcoin, this is extremely difficult because if Bitcoin's price goes up extremely high, then in that case, the employer gets screwed. Whereas vice versa, if the price of Bitcoin tanks to 1/10 of where it was, then the employee starves.
Yeah.
Right. Similarly, if you're trying to pay for something using an altcoin like a cab ride, let's say you're using IOTA, for instance, then you thought you'd be paying $5 at the beginning of a cab ride, and then by the time you get off, you could be paying 50 cents or $50.
Right. This happened to us. This happened. I was at Goldman Sachs, basically as a little younger than you are now, and I helped open up the Mexico City office. That's how long ago I was at Goldman, and we were paying the employees in dollars because we didn't have any infrastructure set up to pay them locally. So we just said, screw it. Just get them on board as quickly as possible. We'll pay them in dollars and we'll deal with it later. This happened to be the exact 6-month period when the peso was devalued. So all of a sudden, we had these kind of middle-class employees who were basically wealthy because they were getting paid in dollars while the peso was going to shit. And then, of course, when we had to come in and tell them that we were going to change to pay them in pesos, they were very upset because they were going from being like, paper millionaires to going back to their life. So I've actually lived through exactly what you're saying. Very interesting. So, yeah. Okay. So let's go back to that. So obviously it's difficult to, kind of create this peg when you're dealing with lots of different currencies, but, there's already other kind of digital dollars, right? So what's different about how, you would go about creating this peg, and why it's better than, let's say, just putting a bunch of dollars in a bank account? Or, you've obviously railed publicly, well, not obviously, for those who don't know, you've railed publicly against Dai, which is, kind of the first kind of well-known, successful, to some degree, algorithmic stablecoin. We had one at Abra, but it wasn't decentralized. So why does this need to be? Sorry.
Yeah. Well, so I think the entire reason why crypto became popular, at least in developed nations, and I think, as like a second wave of that, why DeFi became popular, is because, over time, like the regulators tend to add these compliance burdens on using financial products. which is very well intended. So compliance products are, I think, compliance overhead is intended to protect investors. It's intended to protect users. But as they sort of layer on top of each other, money tends to die death by 1,000 cuts. Mm-hmm. So what that means is that as you start to layer on compliance overhead, people get priced out of finance. It's exactly the same reason why there are tons of people, billions of people across the world that don't have access to banking services, because as that compliance overhead adds up, unless you can, maintain a minimal bank balance, it doesn't make sense for the bank to keep offering you those services. And the user experience, even if you can gain access, becomes extremely horrible. Because, for example, if you're trying to open an account, you need to physically visit a branch and then fill out all this paperwork and then talk to a branch manager. And then if you're doing it online, you have to do all these things in this tiny mobile phone. That just doesn't make sense.
Yeah.
So, the beauty of DeFi and crypto is that because there's nobody in control, there's nobody to pass on that compliance burden to, right? So you really have these beautiful user experiences where once you go to a website, all you need to do is to understand the stack, how it works. You connect a wallet, and that's it. You can trade whatever you want. You can make deposits. You can earn yield, and I think that's sort of a schema whereby nobody's being priced out of the market insofar as they have the intellectual capacity to understand, mm-hmm. and they can own up to their own risks. It's great. Now, with centralized stablecoins, the issue is you sort of remove all of that decentralization benefits of the stack that's built on top of above. Because if you're keeping $1 in the bank account for every unit of stablecoin that is issued, whoever has control over the underlying bank deposits can hold hostage the entire DeFi stack that's built on top of above. So for example, you can spend a lot of time making sure that nobody has the operator key, that the development stack for your lending protocol is fully decentralized. But it doesn't matter if Circle can suddenly say, hey, look, we're going to have to freeze all of the balances that exist in your lending pools because, let's say the UK regulator said we can't do this, right? So there's actually a pronounced preference for builders all across the industry to use decentralized stablecoins that don't have censorable collateral precisely for this reason.
So let me make sure for our audience that what you're saying is clear, because I think everybody, 100% of our users use stablecoins. It's the only way to come in and out of Abra. But what you're saying in terms of centralized versus decentralized may not be clear. So basically what you're saying is that a USDC from Circle or USDT from Tether, TrueUSD, Pax Dollar, these are all what I would call centralized stablecoins effectively, because the dollars underlying those stablecoins are in a single bank account for the most part, maybe with some treasuries and dollar equivalents. But that's basically what you're saying. And that undermines the idea of having a decentralized cryptocurrency in the first place. Right. I mean, is that more or less the point?
Exactly. So yeah. These centralized stablecoins in the form of USDC and USDT, they have functions built into the stablecoins, whereby the issuer, which is Tether Inc. and Circle Inc., can freeze the balances, revert transactions, rewrite what's going on in the contracts, precisely to be compliant with, to future-proof themselves in compliance overhead. Yeah. But decentralized stablecoins don't have this property, so whatever coins that you own are yours forever.
And let's be in layman's terms, you would call this, the phrase is an algorithmic stablecoin, right?
Yes.
How would you, it's not easy, in layman's terms, describe an algorithmic stablecoin?
Right. Well, so actually algorithmic stablecoins are pretty easy to understand. You can think about it as its own sovereign monetary system. So similar to how you have other currencies that peg itself to the US dollar of smaller economies, like for example, the Hong Kong dollar is pegged to the USD. There are explicit peg systems to the US dollar of sovereign economies. It works exactly the same way. So you have some sort of monetary policy levers that are algorithmically built into the protocol that allow the money supply to be adjusted for the stablecoin's value to be identical to one USD. Or in Terra's case, not just the USD, but about 30 different fiat currencies.
Yeah, yeah. Okay, so as I understand it, you basically have this kind of formulaic approach where you take a certain amount of crypto collateral and you offset that with a certain amount of your own crypto assets that's trades on an open market in order to create a quasi peg. I don't know if it's in real time or how you do that. Can you explain that process?
Yeah. So the idea is that at any given time, you can trade in 1 Terra USD against the protocol for a dollar's worth of some other crypto. So in this case, Luna or Bitcoin. And vice versa, you can always trade in a dollar's worth of Bitcoin or Luna and then get 1 Terra USD. So to show an example of how this works, let's say that for a moment that Terra USD starts to trade slightly below peg, let's say 98 cents. Then in that case, an arbitrager can come in and buy Terra USD from the open market, and you can swap it to $1 worth of Bitcoin or Luna, which allows you to capture a 2% arbitrage profit, and the arbitrager can keep doing this until the coin repegs. And vice versa, if 1 Terra USD is trading for $1.02, then the arbitrager has the incentive to buy $1 worth of Luna or Bitcoin, swap it to Terra USD, and then capture 2% arbitrage profit to the upside.
Yep. Okay. And what happens if you get in a situation where, it kind of makes sense when the pegs are, the divergence is small, right? Like maybe quarter of a few basis points, or maybe even worst case, 1%. But what happens if you get, like, for whatever reason, 5, 6, 10% swings, which is obviously really bad? How do you deal with that?
Yeah, so essentially what ends up happening when there's a lot of arbitrage that's happening is that, for example, if like Terra USD depegs significantly, then it creates a lot of incentive for people to trade in USD and then get out Luna from the protocol. So that ends up expanding the money supply of Luna, and then that leads in a situation where the price of Luna is falling while the supply of USD is contracting. So this is going to have limits, right? So the con of an algorithmic stablecoin is that it's going to be more brittle than what you get from centralized stablecoins. So what you get in decentralization, you get so you have to sacrifice economic security on the margins. So during small expansions and small redemptions, contractions, it's very robust. But an algorithmic stablecoin probably wouldn't be able to stand like a sudden 80% contraction in the money supply. So this is where Bitcoin comes in, which is something that we recently started to provision as what we call a decentralized forex reserve. And the idea is that while Luna would be more susceptible to death spiral types of situations because it is endogenous collateral to the protocol, if you had Bitcoin, given that it is the largest digital asset, it has the soundest monetary policy out of all the cryptos, it's going to be a lot more resistant to whatever supply changes happen for Terra USD.
So in English, for some of our less sophisticated viewers like myself, what you're basically saying is that Bitcoin is more stable than other forms of collateral you might use. But at the end of the day, the process is 100% the same, meaning in theory, if I want to peg the value of Bitcoin to the dollar, what I really need to do is I need to short the Bitcoin. But I can't do that because otherwise the only way to do that is through a centralized entity, right? And so since you can't do that, you've created this kind of smart contract based process using Luna to act as effectively act as the short. Is that more or less correct in financial terms?
Correct.
Yeah, very interesting. And how long has this been running? How long has UST as an algorithmic stablecoin been running?
So we first launched Terra in April of 2019. So it's been about 3 years for us.
Amazing. And the growth has been phenomenal, right? In terms of the kind of assets or the TVL, if you will, of Terra Luna itself, right?
Yeah. So for I want to say the first year, so we spent a lot of time building payments apps, and payments apps, they've done okay, but they don't grow at the same speed as DeFi. So it was really when I think towards the end of 2020, when Terra added a smart contract execution layer on its blockchain, and then some apps started to roll out, like Mirror Protocol and Anchor. That's when UST started sort of its stratospheric growth. And then I think it grew from maybe $300 million in market cap at the end of 2020 to about $16 billion in market cap today.
Mm-hmm. Yeah, tell us about Anchor. So you mentioned that your initial focus was payments. Obviously, payments are very hard in terms of getting network effects. It can take years. DeFi is booming. So you decided, I don't know if it was you or a third party, decided to create this Anchor protocol. Can you explain to everyone what the Anchor protocol is?
Sure. So Anchor protocol is pretty simple. It's a savings protocol whereby you can put in stablecoin, you can deposit stablecoins and earn a stable yield that is powered by block rewards from multiple POS blockchains like Terra, Solana, Cosmos, Ethereum, and so on and so forth. So the problem that we were solving was twofold. If you looked at short-term money markets on Ethereum, like Compound and Aave, which are sort of the precursors of the DeFi boom, the issue with them was that the interest rate was too volatile for ordinary users to use. So like the rates could change anywhere from like 9% in one day, and it could drop to almost zero overnight. So that wasn't a great user experience for the average user, so for example, if you're giving money to like a bank, for instance, like you need dependability in your savings. Like you want to know what yield you're going to be earning over some steady period of time. But if the yield is so volatile, then it's very hard to use. The second problem was that the money markets are quite volatile. So they weren't earning any yield as they were sitting in the respective lending pools. But what you can do is Anchor only uses something called liquid staking derivatives across multiple different chains. So the idea is that when a user is borrowing stablecoins from other users, he essentially puts up staking positions of multiple POS chains as collateral. Now, what the protocol does is that it uses that collateral, stakes it to various different chains, which is earning a block reward constantly. And that block reward is converted to the lender in the form of a stable interest rate.
Got it.
Which is why the yield is much higher.
So, and that's why right now, I think it's about 19.5%, just under 20%. And it's been stable. And that's the reason that it's stable, because basically it's pegged to the dollar equivalent of the block reward. Is that what you're saying?
Yeah. Well, so Anchor is also subsidized, right? So Anchor has something called the yield reserve, which, during steady state, like the yield that's coming from the collateral should be funding and it should be running at a surplus. Yeah. But right now, I think the steady state yield of Anchor should be somewhere around, 13, 14%. But we've, donated funds from, the Luna Foundation Guard into the yield reserve, such that, UST can have some subsidized growth for the time being.
And based on this subsidized growth, how long should the 20% ROI last?
I think it's going to come down to about 15% over the next 3 months. Yeah. But even at that rate, I think it's one of the most attractive rates in crypto.
It's incredible. Yeah, I mean, we're very impressed at Abra by it, and it's one of the reasons we're actually launching Luna staking this week, which may actually be live today. I'm not sure, but it's in the app, and it's hopefully it's the first step towards making the full Anchor available to Abra users. We'll see. Super interesting. And so let's talk about DAI for a second, right? So you've said, in probably more elegant way than I'm saying now, that DAI should die. And what is in your mind the difference, and why should DAI die?
Yeah, so I actually don't think about Maker Dow as a stablecoin protocol. I think most people use it for something else, but so Maker Dow falls into this third classification of stablecoins, which are not backed by fiat, not algorithmically stabilized, but backed by leverage. So what that means is that the primary use case for Maker Dow before was that people would lock up, some volatile crypto asset, let's say Ethereum, it could be some ERC20 asset, in excess of the loan value. So for example, you would post about 130% of the loan value in a volatile cryptocurrency. You would borrow stablecoin. You would use that to buy more of that volatile crypto asset, and that allows you to gain leverage on that asset. Now, the issue here is that there are lots of reasons why people might want to use stablecoins, but the pace at which MakerDAO stablecoin supply can grow is bounded by the demand for leverage, right? So for example, if there's only about $5 billion worth of loan demands to take out leverage on Ether, then it's not going to be able to accommodate $15 billion of demand to use stablecoins as quote currencies in DeFi or to constitute options protocols and so on and so forth. Mm-hmm. So when confronted with this problem, what Maker did was that it started to use USDC as collateral at a ratio of 1-to-1. So today, about 56% of all DAI stablecoins are actually backed by USDC. So in my mind, this sort of defeats the purpose of constructing decentralized stablecoins altogether, because if you're just going to wrap USDC, like, why bother? Why can't you just use USDC?
It's like taking Stellar-based USDC and wrapping it in Ethereum. You're just
exactly.
one step removed from the bank account.
Right.
Yeah. Interesting. Okay. So, and why did they do that? Was that because they just couldn't get the peg to work using the leverage process, meaning the demand for leverage didn't balance with the way the peg mechanism worked, or was there some other reason?
Yeah, that was exactly the reason. So there's a demand mismatch between the people that want to mint stablecoins and the people that want to use stablecoins, which makes it a problem, right? So during DeFi summer, when when demand for stablecoins was taking off, MakerDAO needed a solution to scale money supply, and the only way to solve the problem of make sure that the stablecoin is trading at par with the peg instead of trending upwards was to allow 1-to-1 minting with USDC.
I get it. Makes sense. Okay. So now we have a reasonably stable peg. What's the biggest risk that you see in maintaining the value of UST as 1-to-1 versus the dollar?
So there are a couple of things. So as I said at an earlier point in this interview, with algorithmic stablecoins, you get full decentralization. You get full scalability that you can't get from leverage-backed stablecoins, but the economic guarantees are weaker generally, right? Mm-hmm. So if there is a massive contraction in the money supply of stablecoins, then it's going to be a lot weaker in terms of economic guarantees than what you get from these more fully collateralized options. So I think our goal is to get exogenous collateral, so in the form of a decentralized forex reserve in Bitcoin, and have that grow to billions and billions of dollars, such that those economic guarantees are stronger. Mm-hmm. So I think as we are building up this Bitcoin reserve, like if for example, like a smart contract hack were to happen with Anchor, or let's say something that comes along. So it could be like, for example, Binance, which is I think a huge consumer of Terra stablecoins, like Binance gets shut down or things like that. I think that could present, some crisis conditions. But mm-hmm. given the pace at which we're provisioning some of these reserves, I would say that's a relatively low probability.
Yeah. Okay. So let's take this out a few years in the future. Where do you see this going? I mean, obviously, the DeFi returns are great today in Anchor. I think that's kind of for some people it's kind of become the grayscale of 2022, if you will. So congrats there, I suppose. But obviously, the party ended at some point, and what was a premium, which created this kind of quasi arb opportunity, turned into a discount, and then, like I said, the party was over. So you can't pay, in theory, if Bitcoin is the same price. I don't think you can pay 15% forever. So at some point the party may be over. But independent of that, where do you, maybe with that or independent of that, where do you see this going 3, 4, 5 years out?
Yeah, so the slogan that we use is that a decentralized economy needs decentralized money. So instead of being held hostage to the monies of the physical world, I think crypto deserves its own sovereign money. And I think that's the role that we want to be playing with, Terra. Mm-hmm. So we want Terra to be the largest and the most decentralized, and hopefully the most useful, decentralized money across multiple different blockchains. So in Terra, on the Terra blockchain, obviously, but across Ethereum, across Solana, Avalanche, wherever there happens to be developers and users. And I think if you sort of if crypto gets its own sovereign money, you sort of unlock a lot of different use cases that people weren't able to do before, because it's really difficult to build up a complicated stack on top of something that can be very easily censored. But if you get something where you get a lot of decentralization guarantees, then you really don't have that problem.
Yep. Okay. So from a use case perspective, what's your guess as to how this evolves?
Yeah, so today, empirically, the stablecoin is the most important product in crypto. It's about 80% of all trading volume for crypto. It basically constitutes 100% of all the liquidity across lending protocols, AMM pairs. And I think the goal of Terra is to be the quote currency across everything, to constitute most of the liquidity pools, to quote all the pairs indexes, to constitute a lot of the transaction rails across centralized exchanges. And I think where crypto evolves is once you sort of get rid of the centralization risks in the protocol layer for a lot for these monies, is I think you start to unlock a lot of use cases where it was just purely bound by things like speculation. But you can now have, DeFi allocating capital productively to like productive use cases, right? So some of the things that you could see is like fungible labor markets, whereby you can borrow against your productive time, which DAOs are purchasing, in order to facilitate under-collateralized credit markets, right? And this is a game changer because instead of leverage just being used to allow people to go long on Ethereum, go long on Luna, you can now use speculation to route money to the most productive labor classes in crypto, the open source developer.
Yep. So and is your assumption that those contracts all have to basically be on the Luna blockchain, or are they going to be running all over the place, Ethereum or Cardano or Solana or whatever in the future? And, how does UST fit in that model? Or I suppose there will be multiple algorithmic stablecoins over time based on Luna. How do they all fit in a multi-chain model?
Oh, I think absolutely. There's going to be lots of different chains, and all of them are going to have their own contracts. We intend to be doing a lot of building on other chains as well. So I sort of think about, these blockchains as different cities. So I think about like Avalanche, for instance, is LA, right? Where like the scaling model is horizontal. So LA has scaled to, Santa Barbara and San Diego. Whereas I sort of think about Solana as Hong Kong. So you build really tall buildings to be able to fit in lots of people. So I think about a lot of these, blockchains coexisting, and then I think there's going to be diplomacy and trade routes that open up between them in the form of cross-chain bridges. And I think, if you think about like Terra as a nation state, our primary export is going to be stablecoins.
Yeah. So we both started our companies with this idea that a fully decentralized cryptocurrency was the better way to do person-to-person payments. And we both backed into yield as kind of and lending as the killer initial use case, which in theory may or may not get us to the promised land. And we're both buying Bitcoin as collateral, just doing it in different ways. What is the route to payments here? At what, besides trading? Okay, let's leave trading out of it. What is the route to full global adoption of person-to-person crypto-based payments, or person-to-merchant for that matter?
Yeah, so I used to think that the way to do this is to convince merchants of everyday e-commerce platforms to transact using cryptocurrencies or stablecoin. But from my experience, I found that to be really difficult because, with payments, it's kind of like, it's really hard to get a user to prefer one payments option over the other, unless you're burning lots of money to convince them to get there, because they're all pretty much the same, right? Like the user experience has converged to, whatever level that they should be. People don't really have a strong preference between one payments platform over the other. But I think where crypto does have an edge is to note that a lot of consumer behavior is actually starting to move online, right? So for example, a lot of the stuff that we do in DeFi, some of it is for serious trading, but a lot of it is just user consumer behavior to learn about the industry and just to have fun, right? And as we get a lot of these Web3 native games and NFTs, it means that our culture is starting to shift online, and our property rights are starting to take root more in the Web3 world instead of the physical world as well. So, and here cryptocurrencies we can't be beat, right? Because you're not going to allow, credit card transactions and metaverse talking to this giant frog wearing a crown, right? It's going to happen. All the payments are going to happen natively in crypto, and all the assets that are Web3 are going to be paid for in Web3 payment options. So as you start to get a lot of consumer adoption into Web3 itself, and all that payment is happening in Web3, I think that's going to seep out into the physical world, where merchants realize, well, a third of our user base happens to, own like a bunch of frog NFTs. We might as well let them pay in crypto because it makes sense for our business. And I think that's how we get to adoption.
Interesting. So you think that there are going to be crypto-centric use cases that kind of act as the initial bridge, not kind of the traditional use cases that I may have been excited about in terms of remittances or, building a better Square or something like that, or Venmo, that it's literally going to be inside metaverse where you want crypto native, and then in your case, probably want dollars as opposed to sats, which might settle on Lightning. Is that right?
Yeah, correct.
Do you think that let's go there for a second. So kind of the Luna / Terra model versus the Lightning Bitcoin centric payment model. I mean, where do you come out on how that's going to evolve? So let's assume that it's what you said, that it's inside the metaverse, that these payments are happening in a crypto-centric way for crypto-centric applications, not in the physical world, for sending money home to Mexico. Why the Terra model on Cosmos versus Bitcoin on Lightning?
Well, so actually, payments is like a really big word, right? So for example, if you're paying for like a Rolls Royce, that's going to be a completely different market from buying some tofu at a grocery store. So I think for certain use cases, price sensitivity might not matter as much. So for example, if you're trying to send money abroad where the local currency is already super volatile, then I think sending money over Lightning denominated in Bitcoin makes sense. It doesn't actually matter, right? And especially because once people get it, like for example, if you're sending money to Mexico, and then like this Bitcoin is likely going to get used right away, right? So the volatility doesn't matter as much.
It's ephemeral, right? Yeah.
Yes, but for day-to-day transactions, it matters a little bit more because if there's volatility during the settlement process, which generally takes a few days for any merchant, unless like you want to have some sort of algorithmic cashing out process that's going on all the time. In that case, if there's small volatility that is baked into that settlement layer, then in that case you need to increase the fees in order to justify that FX risk.
Yep.
So I think for smaller ticket items, day-to-day payments, stablecoins matter a lot more. If you're sending $20,000 over remittances, then Bitcoin is fine. Like if you're buying a car, that's fine. If you're buying a jet, Bitcoin is perfect.
Yeah, it makes a lot of sense. Very interesting. Look, I could talk to you about this all day. We're way over what I thought we would be doing here, but I wanted to really get to all of this because I think this is really interesting for our viewers. but I tried to get through all the questions we had online. So we're big fans of the work you guys are doing. We want to see this continue to become more and more decentralized over time. I would love to have you back in a few months and get an update on what's happening in terms of TVL and how you guys measure decentralization and where you are there. And, just see how it's going in general. And, we'll obviously going to continue to be big supporters of Luna, Terra Luna, now that they're also live in the Abra app. So, thanks so much for the time, and congrats on the amazing progress the last few months.
Thank you so much for having me, Bill. Speak soon.
Our pleasure. Thank you. All right. Wow. That was really, really cool. And I'm really glad we finally had the chance to organize that. And by the way, I did check. I was looking at the App Store just while we were finishing up there. And yeah, we did release an app upgrade this week. And the upgrade supports a couple of new assets for staking. So we've got DOT, which will be paying 10%, and Luna, which will be paying 3.75%. I think we're working on adding UST as well. And I'm not sure about when that will be coming, but more on that soon. And obviously, we're also supporting Cprx staking now. And I believe something like 60% of all Cprx on Abra is already being staked in Abra Earn. So again, super interesting. Thank you to Doe for doing that. We really appreciate it very much. So coming up, we're going to talk about what's going on for a few minutes in the crypto markets. I'll give you my take on Bitcoin, Ethereum. I think it might be in for a pretty interesting breakout. And first, we've made it really effortless to trade crypto on Abra. Making trades in Abra is safe, simple, secure. It's the only way I trade. So check this out.
Trading on Abra is easy. Just click the exchange button. Tap the source you'd like to trade. Tap on what you'd like to trade it for. Type in the amount. Then click trade. Tap, type, trade. Totally easy on Abra.
Yeah, so just a couple of things. So before we get to the markets, a couple of follow-up questions I saw on the live stream from you all on Terra, Luna, and Anchor. So one question I saw was why Anchor or why Terra doesn't provide support, if I get my words right. Why doesn't Terra provide customer support for Anchor? Keep in mind, Anchor is a DeFi protocol, right? This is not a company. So a DeFi protocol is an open source means for borrowing and lending and generating yield, and you're using it at your own risk. Okay, so be very careful when you're accessing DeFi directly. You're not going to get support from the open source developers behind the Anchor protocol. So I hope that clarifies that. I just talked about the staking. And like I said, Luna it's live in the app. I don't know if it's turned on for all of you yet. It's not turned on in my app. I have the same app that you do. Hopefully, we'll be turning it on for the users on a rolling basis in the coming days. Okay. So those are the big questions I got on Terra. There was a bunch of other questions that I think we mostly answered in the chat. One of the more fascinating discussions, I'm a big fan of the algorithmic stablecoin model. And if you know the history of Abra, you know why. So we're going to get to other questions on Cprx in a moment. I want to just we're not going to spend a lot of time today on charts and the markets, but I do want to talk about it for a minute. So let me get my Chrome up here. Oh, wrong one. So that's the wrong screen. We try it again. And there we go. All right, so I'm going to start out with the monthly chart here, and then we'll zoom in a little bit. So you see in the monthly chart, obviously going back to 17, huge uptrend, consolidating patterns since basically early last year. Let's zoom in and go to the weekly chart. clearly we're in the middle of this sideways pattern range, but we're coming off a really strong base that formed in mid-January, right, when we had the pullback, and is basically now, I would say, over as of last week. So now the question is, usually this kind of base or accumulation phase acts like a winding of a rubber band with a lot of potential energy. And so the question is that potential energy going to be enough not only to propel us higher to the top of this band, which would be mid 60s, but beyond? So my gut feeling is the answer is yes, but it might take several more weeks. Okay, so don't expect Bitcoin to be at 80,000 by the end of April. But on the other hand, I think that not only was this accumulation in February and early March really positive for crypto, the accumulation that's happening via MicroStrategy, via Terra, via other institutional investors now, retail is coming back, is got me really bullish. So speaking of the daily, let's go to the daily chart. And so now you can see as we zoom in that we're really in this multi-month sideways pattern. But on the right-hand side here, from basically first week of January up until about a week ago, we were in this pattern that I showed you last week. And a few days ago, we clearly broke through this pattern. So let me zoom in a little bit more here on the daily. You can see what I'm talking about. So right here, right, is where we broke out basically of this channel, okay? And you can clearly see a clean break. Not only that, we're sitting right above the 200-week moving average. I'm not a technical trader. I know enough to know that when you're basically sitting on a 200-week moving average with a clear break after coming out of a channel, it's really bullish. So I wouldn't be surprised if we get a nice pullback to 44.5, somewhere in that range over the next couple of days over the weekend. And that acts as more fuel to propel us into the mid 50s. I would not be surprised if we're doing money talks in Miami next week at the Bitcoin conference with Bitcoin in the low to mid 50s. Not a crystal ball. Take my technical analysis for what it's worth, but that's what it looks like to me. So let's zoom in a little bit more and go to the 4-hour chart. So on the 4-hour chart, you can clearly see it's been pretty bullish for, basically, let me go back over here to from about the end of February, where we bottomed our mid 30s up until, a couple of days ago at 48. That's a $14,000 run for Bitcoin. Okay. That's a big deal. So I do think we're in for a pullback this weekend. I would have expected, or even hoped for that matter, that the pullback would have us in that kind of low 44,000 range. So if you extrapolate this moving average, you could kind of see where you'd want to be in that 44.5, maybe by let's say Sunday or Monday. And that would be a fantastic base to propel us higher. Nothing's going to go straight up, folks, and including Bitcoin, as we all know. So let me come back to the daily here and take a look at Ethereum. Now, you all know that I am really bullish on Ethereum. All right. Now, every move, I would say three things about Ethereum right now. First, it is crystal clear that Ethereum and the larger altcoins are highly correlated to Bitcoin, right? And there's no doubt about it. Like, you overlay the charts, the prices don't move in lockstep, but the macro trend is clear. Two, the volatility of Ethereum is way higher than Bitcoin, right? So even today, what's the movement? So Ethereum is up over 4%, Bitcoin is up over 1%. When there's pullbacks, the pullbacks are greater. So what that means is that the upside potential for Ethereum, especially given the network effects that I think it's going to see over the next several weeks as we get closer to the merge, are going to be huge, right? A lot of people are going to want to stake. Right now, there's a wait in line kind of function via how the smart contract works to start to stake. And I think there's going to be some FOMO around getting that potentially 10% interest on your Ethereum. Okay, so I'm super bullish on Ethereum, and so the third point that I want to make is that that volatility is going to lead, in my opinion, to greater upside for Ethereum in the coming months. Okay, so like I said, that kind of wait in line function that the markets have evolved to for Ethereum has me even more bullish than ever. And I was already pretty bullish on Ethereum. Okay, Cprx. By the way, let me come over here to the 4 hour. Is having a good run off the lows. Again, it's consolidating, which is interesting. I'm not really speculating on Cprx. I'm just holding it for hopefully for years. We'll get into some of your questions on Cprx in a few minutes, but it is interesting to see the price movement. I think it's basically doubled off the lows or even more over the last few weeks. Again, I'm not really looking at it as a short-term speculative asset, but it is interesting to see what's happening. And mostly I focus my attention on Ethereum right now, which is kind of my kind of beta for what's happening with my crypto holdings and crypto investments. Okay. So I'm going to cut it short there on the market analysis for today and get to the AMA. And I know you have a bunch of questions. We'll talk about Cprx. And before we do that, let's take a look at why making trades on Abra is safe, simple, and secure. So check this out.
Trading on Abra is easy.
All right, welcome back. Let's get into some questions here. I've got the live chat open. The team's giving me questions from YouTube, Facebook, Twitter. Let me see. So a bunch of questions on payouts. I'm seeing those of you who are basically using Abra and think that you're entitled to referral rewards. Please contact support if you're waiting on referral rewards. I have no updates. I don't track individual user referral rewards. And I think there may be some delays for different countries, but I'm not fully up to speed. Hopefully everything will get caught up soon, but definitely contact support. Somebody was asking me about different projects using Cprx. Keep in mind, Abra does not control Cprx, okay? We have our own grant of Cprx, and we can also buy Cprx on the open market. But the Crypto Banking Alliance in Switzerland, that's a name for their nonprofit, is the organization that controls Cprx. Okay, I don't control it. I know from them that there are other projects that are going to be launching this year, and I'm super excited about it. I know we've got other projects that are going to be using Cprx this year, and yeah, I'm really excited about it. Okay. So KJ, same answer on the play to earn gaming. I know that there are projects being considered in that space, and I'm really excited about it. Meaning that there are Cprx projects being considered in that space. I personally don't control those grants, and we will see what happens. Okay. And folks, look, I have no more answers to give on any pending Cprx rewards. If there's some blanket update that I get from the Abra team, I'm guessing that it'll be published on Twitter, Facebook, LinkedIn, via support, via FAQs, whatever, faster than you'll get it here. So keep, I guess keep hounding them. Yeah. So as we've mentioned many, many times, Cprx will be turned on for trading once market orders go live. I know market orders is being tested right now. And so hopefully that will be on soon. I know I will be using it to buy larger quantities of Cprx in the future. On another topic, somebody was asking me, I think his name was Hold the Door, was asking me if I could comment on the SEC cease and desist order. Actually, for Voyager regarding their Abra Earn accounts, regarding their interest accounts and the effect of that order on Abra Earn. So Hold the Door, I don't think that Voyager got a cease and desist from the SEC. The SEC doesn't do that. They work differently. I think the cease and desist came from the state of New Jersey, if I remember correctly. And basically it mirrored a similar order that they sent to a company called Celsius. And Voyager uses Celsius to earn the yield that they pay on most of their crypto assets. That's my understanding anyway. I'm not an expert on their business. Abra works very differently. We work through a partnership with a company called Prime Trust, which is a regulated trust bank in the state of Nevada in the US. And that's why all of you get accounts with Prime Trust when you sign up for Abra Earn. Okay. So the model for Abra Earn is very different, at least to my knowledge, than the model pursued by Celsius, Voyager, and maybe some others. Okay. So it does not affect our Abra Earn accounts at all. And we have a lot of plans for expanding Abra Earn. Okay. So hopefully that makes sense. Happy to continue to answer a few more questions. And I have you guys are asking me if I should trust this CEO in the space or that CEO. I can't comment on that. Some of them I know, some of them I don't know. I use Abra, so I'm focused on Abra. Catherine is asking if the Abra team in the Ukraine is okay. Catherine, thank you so much for asking. By and large, they're doing okay. It's been really tough. Some of them have had families leave the country. Most of the employees that we have there are men. They're not allowed to leave the country right now, and so a couple have actually chosen to fight. And our hearts go out with, and we pray that they're safe and that this ends, this insane war ends really soon. And we still have employees who've insisted on working, even though we've told them that they should focus on their families and take care of their families. And some of them just want to work because it takes their mind off of what's going on. But by and large, that particular team has been offline for a while. Obviously we're supporting them financially, but our hearts go out to them. It's just been an awful situation, and no one's died on the team. The families, I believe, are mostly safe, but the mental anguish that they must be going through, I can't even imagine. So let me see. So a bunch of more interesting questions. So do I have any intention of marketing to Asia? Is the establishment of a branch office in the cards? Coin notes, yes. Abra has staff in Singapore, Philippines, and we will be expanding to other markets, particularly in Southeast Asia. We're looking, for example, at Indonesia. We're looking at Japan and Korea. We have investors in Japan now. And so Asia is a huge market, obviously, and I'm really bullish on Asia for Abra. Okay. And we're also hiring. So you can go to our job sites, and if you see any opportunities across the board, we're hiring in sales, we're hiring in marketing, you should reach out to the team and apply. Bill, what is your opinion on Tether and TrueUSD? I'm worried after what Terra Luna CEO says. I have large positions in Tether and TrueUSD. So look, I think that the idea, Richie, of a decentralized, first of all, it's a great question, Richie. But I think the idea of a decentralized stablecoin is super interesting. Okay. It was what I wanted when we started Abra. That having been said, I don't think there's any short-term risk with TrueUSD or Circle in particular, because they're regulated via the US banking system. I can't really speak to Tether. I don't use Tether, even though Abra supports it. My understanding is that the bank accounts that are holding the funds back in Tether are publicly audited now, but I don't pay attention that much to that. But TrueUSD, USDC, which is what I use, I basically trust because it's integrated with the US banking system. Long term, I would not be surprised if all of them got less traction and more folks started to use something like Terra, especially outside the US, if people don't want to have exposure to the US banking system. But in the short term, I think you're okay. All right. And I use those products and I'm perfectly comfortable using them. But very fair question. And it's a good question to ask. We should basically trust and after we verify. And that's really important for crypto. Catherine asks, will Abra be at consensus in Austin? Not only will we be at consensus, but we have some pretty exciting announcements that we're working on. And I'm really excited about that. Obviously, we'll be in Miami for the Bitcoin 2022 show next week. So I've seen some questions on taxes. We did a whole show on taxes last week, and some folks are asking about the value of the airdrop for their taxes. There's also an FAQ article that explains that the airdrop was basically, the Cprx and the airdrop were worth significantly less than a penny at the time of the airdrop. So you wouldn't actually owe any taxes on the airdrop. That's kind of my interpretation. I'm not a tax lawyer. I don't give tax advice. It's just information, but you can use that information to inform yourself. I'm going to take two more questions. We're already at 75 minutes, very long show today. Wow, a lot of good questions today. So I answered the question, another question on Asia. Let's see. And more questions on Asia. Several states, apparently some more questions about the cease and desist for Voyager. Yes, I'm aware that other states have gone after BlockFi and Celsius. Again, Abra operates differently. We talk to the states all the time. We've never had any kind of action like that. If we do, we'll announce it. But our understanding is because our service works differently, it's being looked at very differently by the regulators. Okay, so hopefully that makes sense. Somebody asks if I'm excited about the upcoming Bitcoin conference. Yeah, I'm actually on a panel next week with Jack Mallers, who's the CEO of Strike. He was the one who kind of introduced Bukele, the president of El Salvador, during his announcement last year. So he and I are going to do a discussion on Bitcoin payments. We have a slightly different take on the likely kind of path to using crypto for payments. He thinks it's going to be completely Bitcoin centric. I don't totally agree with that. I think people are going to hold Bitcoin, borrow against it, and then probably use stablecoins for instant credit payments. And we're very focused on that. So, for example, those of you who might be in the Philippines or in El Salvador or in Guatemala, or even in the US for that matter, you can get an instant on credit line and then use that credit line versus your Bitcoin balance to make payments at any point of sale in the world. And to me, that's a more interesting short-term perspective on payments than just using Lightning. I'm super bullish on Lightning, but it's really important that we solve real short-term problems that not only that all of you have, but the merchants have as well. And right now, merchants are clamoring for more consumers to be able to access their existing payment networks, especially in places like Southeast Asia, where not a lot of people have credit cards yet. Let's see. I'm going to take one more question, and I want to make it a good one. Somebody else asking about BTC Miami. Yes, we are having events here. We're hosting a couple of get-togethers, and so if you're in Miami, reach out to us, and hopefully you'll find us. I'm not going to post the details online for safety reasons, but yeah, we are doing some stuff in Miami. And if you're at the show, come find me and say hello. I'll be there the whole week, Wednesday, Thursday, Friday, and Saturday. And I'm looking forward to seeing a lot of you. So one last question. Let me make it a good one. We talked about the cease and desist. We talked about the Cprx. We talked about staking for Luna. No, is it all the same, guys? Do we have another one? Do we have another one that we haven't answered yet? They're looking. They are looking. So getting more questions on trading as well as paying the rewards. So a reminder, we are rolling out a new market order entry system for our trading system that will actually decrease the spreads even more. We don't charge fees for trading. The spreads are going to come in. This new system is really required to make trading of Cprx fair, given that we have a wide swath of people who own varying amounts of Cprx. Some people who own millions of Cprx and some people who own hundreds or thousands. And we need this new market order system to make the trading fair. So that's coming. I promise you, I've seen it. We'll turn on Cprx Y. Hopefully the explanation made sense. It's a little technical. I apologize. All right, so 80-minute show today, long one. So thank you for those of you who stuck it out. Thank you for joining us, Kwon. Thank you to Natalie. Thank you to the Abra team. You guys rock. And so those of you in Miami, I'll see you next week at the show. And in the meantime, have a fantastic weekend, and we'll see you next week live from Miami on Money Talks.